UTI Large and Mid Cap Fund. In the world of equity investing, investors tend to generate wealth which is in line with what goes into their portfolio over time. Allocation across the market caps has been a well-known strategy to balance their portfolio risks and enhance portfolio returns. This is because large caps have reasonably comforted investors with a greater level of fundamental strength, enabling them to deliver growth with relatively less volatility and risk. Mid and small caps, on the other hand, have rewarded investors significantly, driven by their ability to grow faster and capture market share by operating in niche segments of the markets. Therefore, the combination of investing in both large and mid caps is a strategy to balance risk-reward, as it exposes you to the world that is resilient in nature along with growth potential, thereby enabling investors to achieve their medium to long-term wealth creation goals. UTI Large and Mid Cap Fund precisely offers this opportunity to investors to build their core equity portfolio. The fund is managed with a distinct relative value philosophy, with major emphasis on margin of safety. The fund's core belief is that a company goes through its own valuation cycle, which may vary on account of either macro cycles or company-specific factors, and its aim is to capture the inefficiency in the cycle. Now let's understand its investment philosophy and delve into the fund's three core tenets of inclusion. The emphasis on the inclusion of stocks. 1. Focus on companies where their valuations are lower than historic averages or having relative valuation comfort as compared to their growth potential. 2. Secondly, the company's future growth potential, that is their return on capital employed, ROCE, should be more than their cost of capital. 3. Finally, look out for businesses with high fundamental resilience and sound corporate governance. Exclusion filters. The strategy applies certain exclusion filters to steer clear of businesses which could be an impediment of growth and ensure the portfolio has a high safety margin. 1. Companies with weaker ROCEs or inconsistent operating cash flows throughout the cycle are filtered out. 2. Companies having high borrowings or where their high growth stories seem maturing, or the ones with high PE ratio, are also avoided. 3. Companies where their terminal value is weaker or having a sign of weakness are excluded. Investment strategy. On the basis of fund's well-defined investment philosophy, the investment strategy relies upon having a mix of good quality companies trading at below-mean valuations, well-run cyclical companies, turnaround companies, and small and mid-cap growth-oriented companies. Let's discuss the strategy in detail. 1. Good quality stocks trading below their mean valuation. Identify companies having good long-term track record of growth, cash flow generation, and ROCE. Such businesses are brought at a reasonable valuations, which could turn around as alpha generators due to change in the cycle. 2. Well-run cyclical companies. A part of the portfolio focuses on investing in businesses which are going through an adverse cycle, however, with potential of mean reversion. Further, the fund also focuses on companies with reconstructing opportunities where the businesses have underperformed due to varying reasons like poor execution, quality of management, or capital allocation issues. And turnaround potential is visible in terms of improved ROCE, margins, and cash flows. 3. Growth-oriented small and mid-cap companies. For identifying mid and small caps, besides cheaper valuation, the sensitivity is heightened to assess cash flows and its growth potential, and that are having an ability to sustain the growth over time. Small and mid-cap companies' exposure is strategically guided with a clear focus on generating risk-adjusted returns while also ensuring attractive valuation in high-quality businesses with growth focus. To summarize, the philosophy of the fund is to focus on relative value approach and emphasize discipline through the market cycles. As a part of fund strategy, the focus is on stocks and sectors trading below long-term averages and cases where mean reversion is possible. And we believe this strategy has the potential to generate significant alpha over the medium to long term. Now let's look at the investment framework of UTI Large and Mid Cap Fund. Investment style. The fund follows relative value philosophy, which identify opportunities where companies are undervalued relative to its own history or peer or growth potential. Stock sector selection. The fund adopts top-down approach for sector selection and follows bottom-up approach for stock selection. Market cap preference. Invests predominantly in large and mid-cap companies. Preferred allocation of the fund in long run, large cap 35 to 50%, mid cap 35 to 40%, and the remaining allocation goes to small cap. Portfolio turnover. The fund may have moderate portfolio churn with the aim of generating sustainable alpha over the long run. The endeavor of the fund is to leverage from equity exposure with the comfort of stable returns in large cap without missing out on growth opportunities offered by mid and small caps. The fund's portfolio construction approach of picking stocks at significant discounts where it finds comfort in valuation and the ones which are potential for revival has been the source of alpha generation over the medium to long term. The fund is also open for exposure to stocks fulfilling value philosophy, not forming part of benchmark index. This is reflected in fund's higher active share across the time periods. So to summarize, UTI Large and Mid Cap Fund is designed to investors who seek to invest in sound businesses with reasonable valuations and benefit from the growth opportunities in mid caps and potential stability of large caps. So here is why you should invest in UTI Large and Mid Cap Fund. 1. Value-oriented investment philosophy and strategy that diligently look for undervalued stocks with strong growth prospect to unlock their real value in future. 2. Actively churn portfolio on an ongoing basis that endeavors to invest across the opportunities with relative valuation comfort. 3. The fund is suitable for investors looking to build their core equity portfolio for long-term wealth creation. UTI Large and Mid Cap Fund invests in sound businesses with reasonable valuations. Benefit from the potential of stability and growth of large caps and mid caps respectively. Suitable for building one's core equity portfolio. To know more, contact your mutual fund distributor or registered investment advisor or call 86550 19940.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.